Hi everyone, this is Graham. I'm here with your June Market Minute update and to give you a little glimpse on what we're seeing in the real estate market in SLO County. Quick overview, we're in a low interest rate, low inventory market. There's still a lot of buyers and sellers that are out there looking to try and buy and sell. Values really haven't been changed much in the last couple of months. I'm here to give you a little bit more information. Let's dive into some of the details. The median sale price countywide is currently $635,000. That's for a single family home, whereas the city of San Luis is currently at $770,000. That's median sale price. We haven't seen much drop in values. There was a little bit of change, maybe 1 to 3% in middle of March, and some of those escrows that were closing, that was when the stock market was dropping. There was a lot of uncertainty in the market. So we saw a little bit of an effect from that. But currently, just with the fact of being very low inventory and not a lot of choices for buyers to choose from, values are holding strong. As far as inventory, we saw a vast reduction in the number of new listings that were coming on the market in April because of the shutdown orders, both state and locally. And what did that look like? And normally we see 400 plus new listings in the months of April and May. This year we had about 225 new listings in April, up to about 320 in May. So we are starting to climb out of that dip. As far as total inventory, active listings on the market, currently we're at about 850 listings. Normally we see 1,000 to 1,100, somewhere in that range this time of year. And the number of closed sales still continues to be about half of what's normal. Like I said, we are starting to increase as far as the number of new listings that are coming on the market, new homes that are being available to buyers. So I think we'll continue to see that as we go through summertime, kind of an increase overall, a little bit of that bell curve that you'd normally see in summertime. What happens with the economy going forward is anybody's guess. I think we've seen some positive data coming out and some less than expected data as well. My personal opinion going forward, we've seen a huge amount of stimulus dollars flowing into the economy. That's from the PPP loans to EIDL loans. Those are loans that are helping employers keep their workers in place, even to unemployment benefits. Once we see some of those stimulus dollars wrapping up, I think there will be a period there where I'm a little concerned about, is the economy going to go back to the way it used to be? Will companies be looking to cut their expenses and potentially payroll? That's yet to be seen. So I think through the end of the year we'll be okay, but going forward, a little concern on my end. I always try and track closely what's happening with Cal Poly. The number of students that live in town is, number one, a boom to the economy, and is also helping stabilize the rental market, which helps factor into some of the sale prices, especially on the properties that are close to Cal Poly. So I know that Cal Poly is recommending that all of their students come back for fall 2020. That's regardless of whether classes are held virtually or in person. They do want students to be back here locally, and we really haven't seen much of an effect as far as the rental rates. Those haven't changed much. We're not seeing a glut of inventory of homes to be rented. So I think in the short term, the fact that students will be back in town will help buoy the sale prices, especially again around those properties that are close to Cal Poly. I hope this information has been helpful. I always try and provide a condensed and summarized version of what's happening locally. If you are looking to buy or sell, please feel free to reach out. We'd be happy to help and answer any questions you might have. Until next month, stay safe, and we'll see you then.